Hello everyone, welcome to the Market Outlook midweek this Wednesday morning at around about 9:45 or thereabouts, 9:45 a.m. Markets have recovered from yesterday's softness. In fact, the beginning of the new financial year on 1st of April yesterday began with a little bit of softish tone because of the fact that late into tonight and early tomorrow morning we'll have clarity in terms of the uh, reciprocal tariff which the President Trump has spoken about. Which country, how much, on what goods and services, etc. I think the details will be known, and then officially we will react to that particular move tomorrow. But a lot has happened in this time. Both the Indian government and the US government uh, were working together to soften the impact of this reciprocal tariff that has been spoken about by President Trump. India has already taken initiative in terms of reducing certain tariffs on goods and services that comes into India from US, and there is more cuts that is likely to happen. Uh, President Trump has also spoken about going soft or being flexible on the tariffs which will be implemented from 2nd of April. And the fact of the matter is also, friends, that the US economy is slowing down. It has not gone into recession, but it is slowing down. Inflation is going up. And if the cost of landed goods into US from other countries or rest of the world is going to go up because of tariff, then eventually it is going to be the consumers in the US who will end up paying a higher price. And that will also lead to a little bit of inflationary kind of situation. So it's a situation that heads of respective country need to resolve sitting across the table and with a dialogue. Let's hope that falls in place. But before I go any further, let me give you certain levels this Wednesday morning midweek at around about 9:30, 9:45. Sensex is up about 450 points, 76,475 is the level on Sensex. Nifty up about 111 points, 23,275 is the level on Nifty Spot. 390 points uptick on Bank Nifty or Nifty Bank, 51,220 level on the Nifty Bank or Bank Nifty, and on the crude oil and rupee dollar. A little bit of softness in the rupee of 0.18 paise, and the level is 85.65 rupees to $1. And on the Brent and NYMEX, after seeing a reasonable amount of downtick, and of course the unfortunate development in the Middle East, US, Houthi, Israel, Hamas, Palestine, etc., etc. Crude oil has taken a little bit of uptick. Brent is trading at about $74.53 to a barrel, and NYMEX is trading at about $71.25 a barrel. Expect the geopolitical situation to flare up the crude oil prices, at least in the immediate short to medium term. And on the rupee dollar equation, well, on somewhere around 9th of April, we'll have the credit policy, and there is an expectation that Monetary Policy Committee will possibly advise the RBI governor to cut interest rates by 0.25 basis point, primarily because of the softness in inflation that we've seen over the last couple of the reported numbers, and of course the need to pump up the economy and to bring in a little bit of more positivity in terms of growth. The rest of the commentary will of course be listened into very carefully on somewhere around 9th of April, but primarily 0.25 basis cut is expected on 9th of April. That's what the large sense in the market is. Now coming to the other part of the market, and of course the outlook on the market. So we have just 2 more days to go by. So there is going to be this top heavy feeling. And if you recollect, friends, last week on Monday when we spoke, we did mention about 23,000 on the lower side and the top heavy feeling of 23,800, and we went just above that 23,800, and then we've seen a correction on the downside. So this 23,800 level becomes the top heavy feeling level for the markets. It will not be very easy to surpass this level. We'll try to go to these levels, maybe even cross these levels, but on closing basis, if we are unable to maintain our head above that 23,800, then there are going to be multiple times then we will see a downward movement. So it's going to be a very tricky kind of a market. Possibly for traders, it would be a good time to nibble into some specific ideas according to their understanding. But primarily, my sense is that just to give you an outlook on the numbers front, well, on the Nifty upside and downside. So our sense for the Nifty is 23,000 and 23,200 on the lower side could add as uh, support levels on the downside. And as far as the higher level is concerned, well, primarily 23,500 to 23,600. And if we are able to move above these levels of 23,600, then of course that 23,800 mark becomes a very crucial level in terms of top heavy feeling. Possibly you might see a little bit of stock specific ideas, stock specific moves. Like we saw yesterday, IT was down and out. That's primarily because of two reasons. Historically, fourth quarter for IT sector is a little bit soft, and the uncertainty in terms of slowdown in US, and of course budgetary cuts in terms of IT sector spend and discretionary spend. So this is going to be something that is going to be a little bit choppy, a little bit volatile. Other sectors on the fourth quarter earnings, we expect banking finance to do well. We expect capital goods, engineering, defense, cement sector to do well. These are some of the sectors that are likely to perform well. Of course, we'll have a detailed clarity post the earnings season is done and dusted, but the kickoff for the earnings session is going to be post 10th of April. And before that, of course, like I mentioned, credit policy with an expectation of 25 basis point cut. India VIX has inched up a little bit, 13.90, up about 0.65% as I speak to you. But it has comfortably come down from that 16 and 17 kind of zone. So it's a good sign. FIs have turned buyers, sellers, depending upon their mood and fancy. Domestic institutional investors, by and large, have been on the buyer side. There could be some amount of news flows driven moves coming into the market as well. Well, by and large macro data is already in place, but I think news flow in terms of geopolitical situation, the kind of statement made by US, counter statement made by Houthis and Iran, nuclear word coming into those statements, etc. So these are some challenging and difficult times. And at the same time, there would be some amount of positivity in case Ukraine, Russia has to come on the negotiation table and sign some kind of a peace. That will give some kind of a breather on the market. So by and large, friends, if you are a trader, I think we'll use lower levels, 23,000, 23,200 to nibble into the market with some stock specific idea. 23,500, 23,600 being the level wherein you can possibly book profits. But for investors, I think once all this clarity comes through and a little bit of more stability coming through, we will have more positivity in the market. Like we have mentioned earlier also, post June is where you will see a little bit of more stability in the market. Till such time there will be choppiness, volatility, and we'll have a lot of clarity on the monsoon season also. So friends, we have spoken about investment ideas in the past. Today also we have two investment ideas, absolutely from a very different sector that we normally don't speak about. The first one is related to the capital markets, and this one is of course a service provider to the capital markets. It is one of the stock which has actually gone up during all the good times and has corrected also when the markets have corrected on the downside. CAMS is the stock that we are talking about, Computer Age Management Services. This company provides back-end services for all investment related activity. Expectation of market performing well, we expect companies like CAMS, that is Computer Age Management Services Limited, to do well. All the stocks related to the capital market and otherwise have come down post the correction that we've seen. So we believe it's a great opportunity from a long-term point of view on the fundamental side to start accumulating CAMs from a long-term point of view. Approximate target of 4,400. So risk reward is extremely favorable if you decide to invest. Start at a comfortable zone depending upon your risk appetite and then gradually go on adding into it. The second one is from electronics appliances related kind of sector, which is also in the news because of the government policies. More of a domestic consumer durable and domestic appliance supplier. APG Electroplast Limited is the name of the company. Here also we saw a decent correction coming in, but I think dependency on foreign land is reducing as far as components for consumer durable or domestic appliances is concerned. Domestic focus is given a right push by the government, and we believe this correction is a great opportunity to label into PG Electroplast Limited. Approximate target of 1,100. Again, fundamentally from a long-term point of view, similar strategy. Start at current levels depending upon your risk appetite, and on corrections at lower levels you go on adding into it. Needless to say, these are both fundamental investment ideas from a long-term point of view. You need to have longish time horizon, and a staggered approach of investment is the most appropriate way of investing into the stock market. Thank you very much for your patience hearing. I'll see you again next week. Till then, please do take care of yourself and your health. Bye-bye.